Good day, guy. Welcome to Trading Arbitrage Opportunities with Calvin Ports. Welcome to episode 31. On the previous episode, we were talking about price action and we were talking about the euro. In this episode, we're going to be talking about the US dollar. Remember, normally when I talk about currencies, a lot of people think I'm talking about currency pairs. I'm talking about a separate currency as an individual. I don't talk about them as the two of them. Remember, the system that we use is called economic divergence. We need, for us to be able, okay, the euro USD can only be traded with shorts by selling. So that's the only way that I trade it, because if I want to buy the euro, I need to look into euro, CHF, and other currencies because we are carry traders. We want a positive swap. Is if we want a positive swap, we call it a positive carry. So we are carry traders. We carry the swap into profit. So in this episode, I'm not gonna be talking about price action. I'll be talking about the macroeconomic reports that I normally follow for most of my trades. So here, in macroeconomics, I need to show you something else. This is a money supply zero. Money supply zero, I use it to gauge whether the currency will give us, whether the central bank will give us an interest rate cut, a hike, or a hold in interest rates. So I use that by looking at this. So here we've been having a collapse in the money supply zero. Money supply zero is the money that is available in bank notes in cash in between consumers and businesses, and also the money that is available in the bank by the bank tellers, but that money has to be accessible to the consumer, and also the money that is available in assets like the money that can be converted into cash, like assets, cars, and houses. Okay, a car is not an asset; it's a liability, but you can sell it and get money from it. So uh, that those are the three things that money supply zero is incubated into. So I use this to gauge. After having this spike told me that the United States Federal Reserve will be giving us a last interest rate cut towards the closure of the year. So at the moment, we are like 4 months away from the end of the year, and I'm expecting the last interest rate cut. But for me, I cannot trade based on this. I actually go into other confirmations, which are let me move into price as well. The prices I move into other macroeconomic reports to gauge what will happen in the future. I need to look at the inflation and see whether it corresponds with this. And if they do correspond, then I believe that the Federal Reserve has to give us the last interest rate cut. So the leading indicator here for interest rate cuts is something that I never talk of. I normally don't talk about these things because these things are short term things. I would rather, instead of looking at this, I would rather look at this, because this is mostly a long term thing. This is a short term thing. So this is a CPI. Most people talk about CPI. This is the Consumer Price Index. But you cannot look at the consumer price index by itself. You also need to look at the producer price index, the PPI, and the PPI also does not work by itself. We need to look into the personal consumption expenditure, and both we need to look at those to confirm where the inflation will go. So These ones are the leading indicators of inflation. For us to know where inflation is headed, we need to actually look into the leading indicators. So once you see those bad economic reports on these news releases, you know that the inflation will actually not get to where will actually give us a bit lower. So after looking at this one tells you that after seeing what will happen to the inflation and confirming with this, we know that we're going to be expecting that in that last interest rate cut for the year. And another economic report is wages. This one happens after the interest rate cuts. You want to after the interest rate cuts, you want to see how the consumers uh, are responding to their interest rate cuts. But this one is not that much important in the strategies that I use. And after the interest rate cuts, you want to see how the consumers are coping. And this one is for short term trades. You want to see if these guys are starting to purchase new cars. Normally, this one happens at the end of a recession. For us to believe that we're at the end of a recession, uh, these are these are not cars. These are uh, the registrations of cars at the municipality. We want to know how many people have uh, taken cars out of the dealerships. So this is the report that this is the disc and the plates on a car that was purchased. So for us to know whether these people are responding well to the interest rate cuts or hikes, we need to have a spike here before we take that major bus trade that I was telling you about. Now, building permits. Building permits, I use them as a leading indicator towards a booming economy or towards a recession. Now, when I start seeing a steady collapse like this, it tells me that the economy is moving towards a recession. As you can see, we're expecting a bit lower than this one. If we get that spike that jumps all the way up here, uh, remember building permits are 30-year mortgages. For you to buy to have a building permit, you need to take a loan. And that loan is not a short-term loan, it's a long-term loan. So these are 30-year mortgages, 15-year mortgages. So for the people who, when the economy is doing well, we need to wait for interest rate cuts first. And when the interest rates are at the lowest, uh, the consumers are ready. You're going to see a spike in uh, building permits, that the consumers are ready to take long-term loans because the interest rates are low. So for us to exit this recession, if I get a before when I saw this collapse, I knew that the US dollar is moving towards a recession. It's a leading indicator for a recession. And if we get a spike out of here, I'll be preparing myself for that major bust trade. It will be telling me that the economy is moving out of recession. Now here, this is full-time employment. This one I use it to trade long-term trades month after month. For example, last year in March, I had a huge collapse like this in Feb, and I was able to take a short trade in March last year on the US dollar. So selling the US dollar, I sold it because it was towards the end of a fiscal year. A fiscal year ends in March, and most people retire at the end of a fiscal year. So it does not necessarily say the currency is collapsing, uh, and these people are not being fired. They might be going into retirement. So that's why I was selling the US dollar, and those people were reinstated, allowing me to actually buy the dollar. But I did not buy the dollar, I just sold it and I left it where it was. So this is the leading indicator that I also use for those reasons. I need to monitor the time and see how much time I have left here. So these are the macroeconomic reports that I use. You just need to know which macroeconomic report is long term and which one is short term. This one is short term. Is remember full time employment is happens when you see a country taking more employees into. Let's say we get a spike above this one from here. When a company is taking more employees into full time employment, that means the economy is doing well. So that's how they're able to put those people into permanent employment. But now, when you see a movement that moves higher like that, it tells you that the people who went out of employment, who left their jobs in at the end of a fiscal year, the people who retired at the end of the fiscal year, let's say these people are turning 60 years old. So after these guys have retired, they were replaced a little bit, but they were not all replaced. Not everybody was replaced. So if you can see that, let's say we had a spike above this level, we had a spike above this level, that's the only thing that will make me buy the dollar after selling it here, because it tells me that at least we had 2 or 3 employees who were added into the workforce. But if it drops like that and comes below it, it tells me that the currency is continuing to move deeper into the recession. I don't want to extend this macroeconomic report because I know most people don't want to hear about macroeconomics. It's just something that happens all the time. But this, what I'm trying to tell you is that this thing is price action. If you don't look at macroeconomics in terms of price action, you'll never understand what is happening. If you can see that a lot of people went into pension at the end of the fiscal year, and the the permanent employees are not going above this level, then it tells you, if they're going above this level, then it tells you that the business is doing well and the currency will therefore appreciate. But but let's say let's say 15 people went into uh, retirement here at the age of 60. But if we get a spike above this at this level, it does not mean we added 15 employees. It means that 15 of those employees were replaced by employees who are not permanent. But this piece tells you that for the whole year, we only added 2 or 1 employees. So you cannot classify this as a 15 unless if it becomes twice the size of this candle from this piece all the way up there, then we know that we actually added more employees into the workforce. So this thing moves the market a lot. I can actually trade the markets using this thing, but you need to understand it. You need to have a better understanding of this part of macroeconomics. When you see a drop at the, okay, you need to wait until March, because March is the end of the fiscal year. You cannot trade this system without, you cannot start trading this thing now. You need to wait for the end of the year and see whether the employees are being replaced or not, and that will tell you where the currency will go. uh, Thank you guys for being patient in this tedious macroeconomic report. YouTube does not allow me to uh, conduct videos that are above 15 minutes. So once they go to 15 minutes, I need to, you know, take profit on those videos. As you can see, this video is moving towards 15 minutes, so I need to take profit before the end of the video. That's just something that I'm dealing with, and it becomes more and more difficult for me to upload the necessary information. Uh, in terms of macroeconomics, it's easier to do price action this way, but it becomes more difficult. Thank you guys. I'll see you on episode 32.